Hey there everyone, this is Connor and you're watching What's Trending on YCharts. Every month we share with you which stocks, funds, and econ data are trending and getting the most page views so that you can stay ahead of trends and make smarter investment decisions. Today we are talking about the long road ahead for Tesla to meet Wall Street expectations. We'll take a peek at bond funds and what's happening with their prices and yields. And finally, we'll make an economic comparison between the United States and our largest trade partner, Canada. If you have any questions about this data, check out the description below. Don't forget to hit subscribe so you never miss a video from YCharts. And now, let's see what's trending. All right, let's get started with the hottest stocks on YCharts as of late. It makes sense that we're seeing a lot of the largest companies in the US on this list, and all of them are hurting so far in 2022. However, we will note that Apple, Amazon, and Tesla has so far avoided testing those lows from June 2022, while all these other names have made new lows as of August or September. It's been a while since we talked about Tesla and Elon Musk, so let's dig in and see what the largest EV manufacturer is doing right now. And as we said, things aren't totally bleak for Tesla in 2022. We have their share price in purple, EPS actuals and estimates in orange, and revenue actuals and estimates in blue, with actuals being represented by thicker lines and estimates the thinner ones. So this chart shows us that Tesla has been beating expectations consistently since mid-2021, and the price is up in that time, albeit quite volatile. And what we'll focus on is this road ahead as analyst expectations really slowed down in 2022 along market-wide pressures. But if Tesla is going to match street expectations going forward, they're really going to need to turn it up to beat those EPS and revenue goals over the next year plus. Now on to the hottest company pages with the most page view growth month over month. Two names that top this list, FedEx and Adobe, are here for the wrong reasons. FedEx because of poor earnings and really pessimistic guidance from management on a recent earnings call, and Adobe, which crashed after announcing that $20 billion acquisition of competitor Figma. Others on the list are Nike, Microsoft, Nvidia, and ASX, the operator of the Australian Stock Exchange. So now though, we're going to deliver some insights about FedEx. Here's a chart that we don't see every day. We have FedEx's price in purple, and then we have the number of buy, outperform, and hold recommendations for FDX of a total 26 Wall Street analysts covering the company. Here in October 2022, the buys have dropped down to 10 and the holds are up to 16, as we see that a lot of analysts have changed positions. Remember that in September, FedEx management slashed its earnings forecast, pulled its outlook for the year completely, and called for a shortfall of $500 million in 2022. Okay, turning now to the most popular mutual funds and ETFs on YCharts. Lots of brand name funds out here like SPY, the Qs, AGG, VOO, and more. And we have a pretty healthy split across equity and fixed income funds. I will call out ARK, ARKK at the bottom there. It was once a staple at the very top of this list and now relegated to that bottom position. But we're going to talk a little bit about this souring position for both stocks and bonds. 2022, it's surely going to go down as a bad year for investors, but it's also quite a rare one based on historical standards. It's not often that you see stocks and bonds going down at the same time, but that's certainly what's adding to so many of our pain. When both do go down in tandem, it's typically a sign of uncertainty. Stocks up and bonds down would mean we're all risk taking. Bonds up and stocks down would mean everyone's pretty risk averse. However, now with both down, it just means no one knows. They prefer to sell and take their cash and get out of everything. Now looking at the hottest mutual fund and ETF pages, those with the most month-over-month page view growth, folks were very interested in dividend yields, and namely for Vanguard's Treasury Money Market Fund, Vanguard's Wellington and Wellesley funds, which are both balanced funds, and the Schwab US Dividend Equity ETF. We, however, are going to focus on these bottom two results, SHI and TLT. Back to Finance 101, price and yield have what kind of relationship? An inverse relationship, that's right. And this chart shows us that pretty clearly. SHI representing short-term bonds and TLT for the long term. We see in our top panel total return percent change, and then in the bottom dividend yield. Since these are ETFs, that dividend yield represents the coupon payments. And as the Fed reset rates back to zero in early 2020, both of these ETFs' prices increased, but their yields fell. Now, with the Fed hiking rates aggressively, prices are cratering as the yields rise rapidly. Funny enough, over the last 10 years, on a total return basis, SHI, TLT, it really didn't matter. You're getting the same total return. But if you think rates will continue to rise at these next two Fed meetings through the end of 2022, perhaps SHI would be the better option of these ETFs. Okay, bringing it home with the most popular econ data on YCharts. And what do you know? Lots of people checking in on treasury rates. Of all treasuries, the 3-year, 1-year, and 6-month offerings currently have the highest yields, and the 3 and 1 year are above 4%, something that none of the others can say. After rising throughout all of August and September's treasury rates have bounced around a little bit here at the beginning of October, but those two remaining FOMC meetings in 2022 will surely be the determinant of where they head next. As there are currently a number of inversions across the yield spread, across the yield curve, we're going to take a look at that 10-2-year yield spread. So we have that 10-2 spread in purple, and we've also added the 10-year to 3-month treasury yield spread in orange. And our red line indicates at 0.00 that point of inversion. Looking back to 2019 and 20, we see that both of these spreads inverted, but the 10-year to 3-month spread inverted to a much greater degree. And then now here in 2022, the roles are reversed, with the 10-2 spread inverted by about 50 basis points, and the 10-year to 3-month spread holding steady above that line of inversion. We're certainly going to be watching both of these very closely going forward. Very strong track records as recession indicators. And finally, the hottest econ data pages with the most page view growth. A lot more treasury rates here, but we also see that US recession probability, Canada's unemployment and inflation rates, strategic petroleum reserves, and the thrift savings plan G fund, the TSP, actually doing pretty good here in 2022. But as we see our number one trade partner, Canada, it's a great opportunity to check in on our neighbors up north. At least based on inflation and unemployment, Canada is doing pretty well economically, holding their own. The unemployment rate is historically a little higher than that of the US, and the current environment is no exception there. Their unemployment rate is ticking back up slightly, as is the unemployment in the US. Long-term inflation, however, is lower in Canada than in the US, and there's going to be some interesting forces at play here. It's our largest trade partner. We see the US dollar gaining strength, but our trade deficit with Canada has also increased since COVID-19. So lots to watch there with that currency pair, trade balance, and these inflation and unemployment rates as well. All right, everyone, that does it for another What's Trending on YCharts. Today, we talked about those steep expectations for Tesla's EPS and revenue in 2023. We looked at falling bond prices and rising bond yields in light of the Fed's rate hike decisions. And finally, we made that comparison between the US economy and the Canadian economy. We'll see what happens going forward with our largest trade partner. We hope you enjoyed this show, and we'll see you next time for What's Trending.